Hello and welcome. This is Matt McCall. Thanks for joining me here for another edition of Moneyline. It is December 1st, believe it or not, last month of the year that we're coming into. We got a big show today with the markets breaking out to a new all-time high. We had the Bitcoin hit a new all-time high in the last 24 hours before a little bit of a pullback. We're talking about SPACs. We're talking about stocks to play the breakout in Bitcoin. And of course, some of your questions all coming up right now on Moneyline.
The buck starts here. Moneyline with Matt McCall.
All right, folks, once again, this is Matt McCall. Thanks for joining me. It is December 1st. It is a Tuesday, 2020, and this is Moneyline. You notice, we've been getting a nicer set every show, I feel like, and we kind of took a step backwards. I feel like I'm back in time here with this picture behind me, but I am out of town right now. I would love to have the view I'm having right now of the Gulf of Mexico and the beach right next to me. I feel like I could reach out and touch it, but it doesn't do well for lighting, so I have to sit here and clear the house out and get it nice and quiet for me. So we're doing that Friday. I will hopefully be back in the studio, so we'll be back to normal. But we didn't want to miss a show, so we wanted to get out here, especially after taking a day off last Friday with Thanksgiving. So everybody had a wonderful, safe holiday, and let's get into this because right now we have the market breaking out to a new all-time high. The NASDAQ's at the best level ever. And we just wrapped up in November. And as many of you know, November was one hell of a month. If you take a look back, we had the S&P up about 11%, NASDAQ up just under 12%, the Dow up about 12%. The Russell 2000, the small caps I've been talking about, up over 18%. At one point it was up over 20, but we had a little pullback to end the month, so up over 18%. I mean, these are record breakers. The last time that the S&P 500 closed over 10% for two months in one calendar year. It happened this year because we had the big rally, obviously, in April after that big sell-off in March, and the S&P was up over 10% in April. And then, of course, we just had it up over 10% here in November. It also happened in 1982. Does anybody know what happened in 1982? Well, I was 6 years old, so I don't remember much about the stock market at that point. But I will tell you this. 82 to 2000, where it was really a 18-year bull market, in my opinion. 66 to 82, the Dow Jones Industrial Average, if you would have bought in the middle of 66 to the middle of 82, the Dow was at the exact same price. Of course, a lot of bull markets, bear markets along the way, ups and downs, corrections along the way, recessions, you name it, expansions. But the Dow was at the same level for 16 years. And I haven't brought this chart up in a while. Maybe I will in the next couple of podcasts. But it looks at the last over about 120 years of the U.S. stock market, how we typically go in cycles of about 15 to 18 years or so. So 66 to 82, 16 years basically flat. 82 to 2000, 18 years up. 2000 through 2000, about 15-ish until we broke out. So 15 years going flat. And now only about 5 years into the next trend. And that's why I believe we got the roaring 2020s. It puts us at 15 years of a bull market. Keep in mind, you have pullbacks along the way. That's fairly normal. You're going to have, some of these corrections and these bear markets. How quickly it happened earlier this year. The same thing happened in 1990, 82 through 1990. Everybody thought it was over. And then, of course, the 1990s were one of the greatest decades ever for the stock market, especially technology and innovation, because we had the advent of all the semiconductors coming out. We had personal computers. It just changed the way that the world lived, really, for the better. And I believe we're going to see the exact same thing coming up here in the roaring 2020s, where you go back to 82 and then you had this and just took off. I think we're set to take off again. I always think it's more like 1990 personally, because we just had about 8 to 10 years of a really good bull market run. Take a little bit of a breather, just like we did in early 1990. We had a market pull back about 19.5% in early 1990 before we started the 10-year bull market. Again, you call it one big bull market, two separates. But either way, I think the roaring 2020s are alive and well, and I think we're ready to take off. And you look at all the numbers here and more, man, they look pretty darn good. So a couple other things to consider. As I just mentioned, we have stocks at all-time highs. We have housing prices at all-time highs. We have corporate bond yields hitting all-time lows. That means, so why that's important is because that means corporations can borrow money at the lowest level ever. Especially companies that have very good balance sheets, solid long-term business model, they can borrow money very cheap. For example, I looked at a house this weekend. I don't need a new house, and this thing was ridiculously big. But if you looked at the numbers when I ran them, it's amazing because you can get interest rates so damn low that when you're borrowing the money, my goodness, I mean, you want to borrow right now. If you have a great idea to invest in, don't just borrow to spend on junk. That's terrible. That's a really bad idea. But if you have a good idea, if you want to start a business, if you want to expand a business, if you want to buy a home, things that are actually good, constructive buys, if you will, and constructive investments, I think it's a great time to borrow money. And that's where I'm going to differ from most of the financial media, where they're going to say, no, pay off your debt, pay off your mortgage. Bullshit. That's terrible advice. In a time like this, you want to borrow if you have a good idea. So we have that. I mean, really, you're looking at all these things going on right now, and people say, "Oh my God, it's so good, it means it's going to end." Why? Why do we live life in such a demented way? And don't get me wrong, I'm like that too. I am. But I'm an Eagles fan, for Christ's sakes. So I'm a born pessimist when it comes to certain things, but when it comes to stock market, I'm a born optimist. And I got to tell you, I think things look really, really well right now. With the Fed on our side, be a lot of spending. We're going to see another stimulus package. We're going to see some type of infrastructure bill, most likely clean energy related. Not as big as it would have been with the blue wave, but still going to be pretty big. So we have all that stuff going well right now, hitting highs. And then we have another thing hitting a high. We have Bitcoin. Bitcoin broke out and traded just below 20,000 in the last 24 hours. 20,000, folks. It's unbelievable. And if many of you follow me on Twitter over the Thanksgiving holiday, I think it was actually Thanksgiving Day, because I think I was cooking. I bought more Bitcoin at 16,300 and change. Like I said, it just ran up in the last 24 hours to 19,915. Then it had a major pullback in the last few hours. It came all the way down to 18,100. So it pulled back about 1,800 points. So about 9.5%. And that would bounce back up. Now we're at 19,000. So you're going to see a lot of volatility right here, and especially as we're right at that 20,000 level. Psychologically, obviously, it's a huge level. But I think when we break above 20,000, man, we're going to take off. And I've been saying this for a while. So, and buy on all dips. I've been telling you guys, buy on dips. We had one over the Thanksgiving holiday. I told you when I was buying for myself on Thanksgiving Day, and I'm glad I did, because even at 19,000 here in a pullback, you could do the math. 16.3 to 19. That's what, $2,700. But so you're up what, 15% already on that buy if you would have got in. So not many places you make 15% that fast. So I'm loving Bitcoin here. I'm loving this breakout. This is just the beginning. I think we hit 40,000 next year. So more than a double between now and the end of next year, next 13 months. So it's still not too late to get in my opinion. I think there's a lot of upside still left. And a lot of the altcoins, they lag a bit. When Bitcoin started breaking out a couple weeks ago, the altcoins then caught up, and you saw a huge rally before the most recent pullback. Once we see Bitcoin break through 20,000, these altcoins are going to join, and you're going to see, man, some big moves. But what I want to talk about today, and a lot of people ask about this, is, what's a good way to play Bitcoin? Where should I buy Bitcoin? Are there stocks related to Bitcoin and blockchain? So I'm going to try to answer a lot of those questions. Number one, I can't tell you where to buy it. I mean, you have to do a little bit of work yourself. Coinbase is a very easy place to go buy Bitcoin. It's not cheap to buy it, but there's nowhere really cheap to buy it. You have Coinbase Pro too. You can sign up for it. It's a little bit cheaper there. Gemini, that's the Winklevoss twins. It's their outfit. Binance US. It's not available to everybody here in the States though, but that's one to take a look at. You can now start buying it on Square and PayPal. So it's up to you. You have to do a little bit of your own research. I could hold your hand a little bit, but like they say, I can give you the fish or teach you to fish, and I need to teach you to fish. Get the hell out there and do some work. Things aren't that easy. Things don't come to you that easy. So go out and do some. We all have Google, right? Just Google it. I hate when my employees ask me a question, because if I don't know, Google the damn thing. You get the same internet access as I do, just as fast. Don't ask me questions that you can figure out on the internet. All right, so when it comes to that, and people say, well, when should I buy? Follow me. I've been telling you. I told you 16.3. That's when I was buying. So it's up to you to make the moves. So I can't do everything for you. So let's talk about a couple of different ways that people talk about playing it. One is a fund that trades. It's a grayscale fund. Symbol's GBTC. It's been around a while. You can buy it. It's not an ETF. It's not really a closed-end fund. It's just basically a fund that tracks the price of Bitcoin. However, funds like this, they trade at typically premiums or discounts. And what this means is, if you take the value of what the assets are in that fund, and you put it together and what the value is right now, if it trades at that value, it trades at 0%, not a discount, not a premium. If the stock or the fund is trading above the value, it trades at a premium. Meaning, if you liquidated everything in there, what you have is not as enough as the share price is. So right now, GBTC is trading at a 17% premium. It used to be much higher. So basically, people are paying up. You don't want to be buying things at a premium because eventually it's going to come back down to where it should be, and it's going to drop 17% down to where it should be. To give you an example, the gold ETF, GLD, trades right now at a 0.5% premium, so just a slight premium on that one. But typically, any ETFs or any funds are going to be right around 0 to 0.5%. There will be some closed-end funds sometimes that invest in debt and fixed income that will be out of whack. I saw some that invest in equities over the March timeframe, the pullback, that were out of whack. These are closed-end funds, similar mutual funds, but they trade on the exchange. And yeah, sometimes they get out of whack, and sometimes they get back to normal. Sometimes they trade at a discount, and they trade below what they're actually worth. And those are great buys sometimes. So just to get in, again, if it trades at a premium, it means the stock is actually trading above what it's actually worth. So right now it's a 17% premium. So that keeps me away from that. Yeah, it's easier to buy it that way, but there's always that concern that overhangs it. And to me, we always have to put all of our odds in our favor, and that takes away some odds. The other one to keep an eye on, and people have asked about this, is there's Grayscale has a couple of them. They also have the Grayscale Ethereum. Obviously everybody knows who Ethereum is, another big altcoin. That trust is ETHE. And if you look at the chart, it's like, wow, it's down huge from where it was in June because it's trading at a huge premium. Even though Ethereum is broken out, it's down over 50% from there. ETHE right now still trades at a 78% premium. So why the hell would you buy that? Because eventually it's going to pull back. 78%. That's huge. So you stay away from stuff like that. Again, maybe it's easy because you can go buy it in your IRA or in your brokerage firm at Fidelity or Schwab or Ameritrade, wherever the hell you're at. But again, sometimes things are easy. It's not the best way to go. So I'd stay away from those. Anything that trades with a premium like that, you have to be very careful. So let's take a look at a couple stocks. And I just kind of randomly went through some of these. Also, I'll talk about some ETFs. There's some blockchain ETFs out there as well. One is RIOT blockchain. RIOT was down below $1 in March. It's at 8.31 here today, down about 2%. It came in close to $9 this morning. Huge volume coming into it. This is one of the stocks that had a big move back in 2017. I remember late 2017, the last time Bitcoin was up at this level. RIOT ran from single digits up to 45, back down to pennies, and now it's at 8.30, as I just mentioned. About a $425 million company. They're doing about 10 million in sales this year, so it's pretty pricey. 50 million next year though, so that's 5x gain. Supposed to be profitable of 2% gain next year, so that's impressive. It's a miner, but also some other related blockchain technologies. It is one to keep an eye on, and if Bitcoin goes to 40,000, these smaller ones will go along for the ride. It could be $1 billion company, but again, they're priced pretty expensive at this point from where it was less than $1 to $8 right now in a matter of 7-8 months. Another one is HIVE, HVBTF, HIVE Blockchain Technologies. Another one that back in January it was less than 10 cents a share. 10 cents a share. It hit $1 today. It's at 95 cents right now, down a penny, but it hit $1. But again, going back to 2017, it was over $5 a share, came down less than 10 cents a share. So it got crushed. It was down 95%. And now it's back up to 95 cents right now. It's had a hell of a run. This is about a $340 million company. I'm looking at about 40 million in sales this year. They're a mining company. They do some mining in Canada, Sweden, Iceland. And the reason they do it in countries where it's cold, because it takes so much damn energy, it's better where it's cold. for all these machines to be running. Again, one to keep an eye on, but extremely risky, both. And none of these are buy recommendations, as always. Another one that's not as risky, in my opinion, is Silvergate. SI is a symbol. Silvergate Capital. It's a recent IPO. It went public last year in November, I believe. November of last year it went public. It started trading around 12 bucks. It kind of went sideways for a while, then fell all the way down to about $7-8 in March, April. We're at $35.83 now, up another 24 cents today. This is when we do have for our early stage investor members, and we got into this at $15.99, so we're up 125% right now. So very congratulations to our subscribers for that. But I will tell you, this is another example of one where we got into it earlier this year, and at $15.99, so let's call it 16. And the stock fell all the way down in March. It hit an intraday low of $7.60. So basically, you were down over 50%. You were down over 50%. And a lot of people say, well, I got to put my stop loss in at 25 or 30. Worst case scenario, 50. You would have been sold out right there at the bottom, and it never saw that level again. We held on because we believed in Bitcoin. We believed in what this company was doing. And now, again, we're up 125%. And that's tough to do sometimes. So it's a $660 million company now. And it's basically a bank. It's considered a regional bank. But what they do is they're one of the few banks that offers banking to the crypto exchanges. So obviously, as more and more people are buying on crypto exchanges, these exchanges are using Silvergate Capital as their bank. I mean, it's what a niche little find that we had. I remember coming across this when it went public, and nobody was talking about it. And I thought to myself, well, I'm probably missing something. But I'm glad we stuck with our guns and stuck with what we have. And you're not seeing big revenue growth with this, but it should be making up to about $1.50 a share in 2022. So it's not overly cheap, but it's not expensive by any means. But it's just a great secondary play on the breakout in Bitcoin and cryptos. Two more that came up. One is CANAAN, I think it's pronounced, symbol CAN, C-A-N. Another one that was this was an IPO in November of last year as well. It ran up as high as 13 bucks on the first day of trading. Came all the way down below 2 bucks in July. It's rallied in the last month. Right now we're at 466, down 35 cents after running up to $7 just last week. This isn't one I'm a big fan of. This one is primarily in China. Does some chips and equipment for blockchain computing. About a $780 million company. The fact that it's not acting well and it's not trading near highs when we have Bitcoin doing what it's doing and crypto's doing what it's doing is a bit of a concern for me. I just can't figure out the company. There's something about it. Maybe it's a gut feeling sometimes, but I'm glad I stayed away from it. And I'd stay away from it now. And one more is one that I think it's changed its symbol recently, actually. It is Galaxy Holdings, and the symbol is BRPHF. It also trades in Toronto, but this is where it trades here in the States. It was down below 50 cents in March. Now it's at 486. It was just above 550 last week. So this is about a $425 million company. It's an asset management firm that's invested in cryptos. So it's a nice play on it. I don't know too much about the fundamentals of it. It's tough to kind of get a lot on this, but this is one that's pretty much a direct play on the cryptos, in my opinion. Again, risky. All this stuff's very, very risky, but it's just another small cap play, a micro cap play, I should say, to play the upside potential here in cryptos and blockchain and Bitcoin and altcoins and everything. So I just want to go through those with you because I know a lot of people ask what's going on, what other stocks, and then just to give you another idea, there are quite a few ETFs out there that are kind of like blockchain ETFs, if you will. One of the original ones was the Amplify Transformational Data ETF, Data Sharing ETF. Symbol's block, BLOK. They're the stupidest names because I think they can't put certain names in the title. But if you look at the holdings of this, Square's number one. Obviously, Square is a major player in Bitcoin. Silvergate Capital, SI, which I talked about, that's number 2 holding. PayPal, the other major player in this area, is 3. Galaxy Digital, I just talked about, they're 4. MicroStrategies is 5. That's one I should talk about here real quick. MicroStrategies, you wouldn't think of it being a Bitcoin play. However, MicroStrategies, their CEO came out earlier this year and said, listen, we don't believe in the US dollar. It just keeps getting crushed. So we're going to put our several $100 million of cash into Bitcoin. Well, you know, that helped the company that had been struggling here for years. I mean, this company has done nothing for years. Bottomed out in 2020, down around about $90 a share. Right now, it's at $330 a share. So that's a big, big move since the low in March. And of course, it's going up because as Bitcoin goes up, their cash goes up. Meanwhile, other companies sitting on cash is going nowhere. This is going up. Very risky play because it's got a lot of hype behind it right now as well. A couple other holdings in there, you know, CANAAN I talked about is in there. NVIDIA's in there because the NVIDIA chips used by a lot of miners. Overstock.com because they obviously have exposure to an exchange. GBTC is in there. A few others. So that's Block, BLOK. And if you take a look at the performance of how that's done here, let's see how it's done. Where are we at? So in the year-to-date, Block is up, looks like 57%. So it's had a hell of a year, a real good year. Yeah, real good year. So that's one. There's another one that has been around a while too. BLCN is the symbol in that. That's the SIREN NASDAQ NEXGEN Economy ETF. Again, these names are ridiculous, but the CANAAN I was talking about, CAN, that's the number 1 holding. Galaxy Digital's number 2, Square's number 3, Barclays number 4, Daimler 5, JD.com 6, Samsung 7, Microsoft 8. So like this to me isn't a play on Bitcoin or blockchain. It's just, I mean, sure, does Microsoft have some play in it? Yeah. Does JD.com have some play in it? Yeah. But it's not. It's very far from the type of ETF that I would want to get into. And I'll share one more with you. This is the Innovation Shares NEXGEN Protocol ETF, symbol COIN, KOIN. These names are just ridiculous. Actually stupid. Number 1's Taiwan Semiconductor, I guess, because you know semis used for the mining. PayPal, Nvidia, Visa, Microsoft, MasterCard, Cisco, Intel. Who the hell owns that stuff? Yeah. So again, that's not a play for me. That's why you have to. I mean, as much as ETFs are great for a lot of people, if you have the time, if you have the brains, you build your own ETF like we do. We build our baskets. There's no reason to do this, in my opinion. I mean, because you're getting exposure to all this shit you don't want exposure to. Accenture. I mean, come on, you don't want IBM. I mean, do you really want to invest in IBM? Yeah, I mean, junk. So, yeah, so that's where we are with blockchain, Bitcoin. So I just want to give you guys a quick update on where we are with that. Obviously, I remain extremely bullish. I've recently bought more, as I've told you about 5 times right now. Let's talk about COVID here real quick. I will tell you this. You know, I always talk about the different tranches of investments we have. You know, we have the newsletters, we have investment opportunities, early stage investor. We have so many different newsletters. We have Power Portfolio. Louis and I are coming out with our new Power Portfolio for 2020 in a couple weeks. Sorry, 2021. 2020, we beat the market by 7x, crushed it. 2021's coming out. We're still fine-tuning the stocks right now, him and I. So that's one tranche where we have all the stocks we use for subscribers that people pay for. Then there is the Penn Financial Group, my money management firm. That's another tranche. They don't overlap. And then the third tranche is my own money. I don't overlap. You know, it gets some people mad because like, well, your skin's not in the game. It is in the game. You know, it is. But when it came to COVID, you know, there was we own different COVID stocks for different tranches. For a lot of clients, I own BioNTech, or I still own BioNTech, BNTX, and it's been great. It's been a big winner. For myself, I own Moderna, mRNA, and I sold it today. I took a 159% gain. I sold at 178, and I'm not even making this up because the high today was 178.5, and I put in a sell at 178 when it was at 177. It hit it, and 2 minutes later it came down. It hasn't been back up there. Now it's at 160. So I only sold half though. My other half is still rolling, but I wanted to lock in a very quick gain with that. So I mean, these vaccines are going to be huge. They're going to be here before you know it. But I think a lot of it's priced into this. So we might be looking to get out of these vaccine-related ones. And when I say vaccine-related, I mean the actual makers of the vaccine. I still think the secondary plays, the the dry ice, the transporters. I think there's still a lot of upside there. The glass makers of the vials, the companies that actually make the vaccine and producing, get it out there. There's a lot of upside there. There's just not as much right now in the actual vaccine makers. I think that they're the first ones to move, kind of buy the rumor, sell the news. So I think we might have seen at least a short-term top. The thing with Moderna, though, and BioNTech, they still have some decent pipelines, too, down the road. And with Moderna, with mRNA, that technology is just game-changing. And COVID actually accelerated. I don't think we would have had anything improved in that realm for years. But this could be big for all the related companies in there. So that's one to keep an eye on. So anyway, I just want to let you know that. And then some of the SPACs have been really moving, as you know. I've been buying quite a bit for myself, for clients. I just think some of them are mispriced here and you get big moves. I bought one yesterday and it was up in a matter of minutes, like 10%, and I didn't sell it, and I should have, because it's down 4.5% today. But I'm still up nicely. But I should have sold it. Sometimes you get greedy, and I make the wrong decisions. I should have sold yesterday, but I still have quite a few myself. And when you take a look at some of the pullbacks we've seen, it's okay. A lot of these SPACs, especially the EV-related SPACs, are pulling back and will pull back. And the news out of Nikola yesterday did not help. The deal they're having in GM decided not to buy shares, invest in a company. But I've been telling you for months, stay away from Nikola, NKLA. Don't do it. That was kind of like the first hot SPAC in the EV sector, and it ran from $10 up to 90. Now it's down to 17.12, down another 16% today. And I've been telling you, stay away from the stock. So stay away from it. There's so many better ones out there. I don't believe in this company at all. Another one I think you should stay away from is Fisker, which is FSR. I did something about this company. I just don't trust the company at all. And that's one that I would be staying far away from. And it recently ran from $9 to 22 in the last 6 weeks. But down today, back down 18.5. I think this comes back down to 12 or so. I think stay far away from it. That being said, there's some real companies out there. There's some really good LiDAR companies out there. There's some really good battery companies out there. So they're not all like this, but again, not all SPACs are created equal. When the whole sector goes up like that, even the junk goes up. And then, you have a pullback, and even the good ones pull back. But when they pull back, that's when you put money into the good ones. And there's plenty of good ones out there. So just keep that in mind. You must be picky because they're not all created equal. Let me see here real quick. I'm going to go to Twitter real live here real quick, and I have a bunch of notifications, and see if I have any questions for anybody here I could take before we wrap up today's show. Like I said, Friday, hopefully be back in the office. Let's see. Some people, I swear, ask the same damn questions every week. Well, here's one actually. There's two on SPACs, and I'll take this just because I just happened to notice it. One's on QuantumScape, which is now QS. And that's a solid-state battery play. And you all know I love solid-state battery. Problem is, this ran from its $10 up to over 50 yesterday. It's at 39.70 today, down about $7.50. It's going to pull back a little. If this pulls back in the 25 to 30 range, then I look at it there. It just got ahead of itself completely. I mean, if you bought it last week at 15, I'd probably take some off the table. But I love the company long term. It's just right now, it got ahead of itself. RMG Acquisition Corp, which is going to be combining with Romeo, which is a battery maker as well. Again, ran from 10 to 19. We're down 10% today at around $16. This could pull back around 13 or so, and then probably give it a shot down there. So just be patient with some of these. You don't have to chase it. The market will come back to you majority of the time. And if it doesn't, you miss it. You're going to miss some stocks, and that's okay. You can't get everything. So that was a good question there. Let's see what else we have. Oh, Palantir. I've talked about this several times, but people keep asking about it like I never talk about it. PLTR, Palantir Technologies. Again, ran up so much. It was at $9 in October, ran up to 34 and almost 34, down to 25 today, down another 6%. Ahead of itself. I think it's a very fascinating company, what they do. It's data, and data is the future right now. So yeah, but it's overvalued. It has to pull back in the high teens for me to think about it. So yeah, if you missed this run here, which I did, I didn't get in this run, be patient. It's okay to be patient. Let's see what else here. Somebody said, quick thoughts on Tesla. I'd love Tesla long term. Should Tesla pull back a little bit before it takes off next? Yes. But remember what I talked about Tesla a couple of months ago, or a couple weeks ago, I should say, is forming an ascending triangle. I showed you on the chart. It broke above that. Typically, when you break above an ascending triangle, you come back and retest it. So if this pulls back to 500, it still looks great. But most people, if they own now at 583 and it pulls back to 500, you think it's over. It's okay. You have to be long-term investors, folks. People kept asking me about Chinese stocks too, and you know, I'm not worried about the government and Chinese stocks. They're not going to screw up Chinese stocks here. This is a global economy. It's not happening. It doesn't even worry me. People keep asking me about taxes. I don't even tell my own clients what to do with taxes. You need to do a tax consultant. You need to get an accountant. And I can't tell you what to do. I will say this. I pay a shit ton of taxes every year because I make money. It sucks, but it is what it is. And, you know, looking back on how I grew up, I would have been happier than a pig and you know what to pay taxes, because it means I was making money. So if you don't want to pay taxes on stuff, then, you know, maybe you hold for longer term. I don't know. Biden might raise taxes, most likely. It is what it is. Unfortunately, if you live in this country and you're a citizen and you make money, you got to pay taxes. It sucks. I hate it, but it is what it is. So I don't change my investing view. If I have a winner, Moderna just sold it, I have to pay taxes on it, short-term taxes. It is what it is. It's money, you know. So I just don't get so wrapped up into it as other people do. Two more questions here. Gold. Gold's been getting smoked. It's up today, but gold has been getting smoked as Bitcoin's been going up. I mean, gold closed below its 200-day moving average for the first time since March. It only closed for a minute back then. If it bounces here, it looks okay, but man, oh man, I don't like gold here. I think Bitcoin is the much better investment. I've been telling you that. I've been telling you for a year, if not longer. It's a much better investment. You know, people say it's riskier, but I disagree. Let's see what else. We have any more here? A couple Chinese stocks. All right. Well, let's end it with maybe an idea for you before we wrap it up here. It's a little too cold to go on the beach today anyway, so let me wrap it up here with an idea. See what we got. You know, let's take a look at this right here. You know, Berkeley Lights, it's a diagnostic and research company. Symbol's BLI. It's a recent IPO from July. And just looking at the chart, it's a very simple pattern. It's in an uptrend channel, higher highs, higher lows. It's recently bounced off the lower low around 77, 78 to 83 right now. If the trend continues, this goes to over $100. So it's one to keep an eye on. I love the diagnostics and research within the healthcare area. So you want to keep an eye on. BLI, Berkeley Lights. That's your freebie for the day. All right, once again, this is Matt McCall. It's December 1st, 2020. My goodness, time is flying when you're having fun. I am in Florida this week, so hopefully I'll be back. I didn't book my flight back yet, but hopefully I will be back Friday in the studio. If not, I'll be doing a show live from here. But make sure you like, subscribe, comment, anything you need, let me know. Other than that, I hope everybody has a wonderful week. I hope everybody had a wonderful Thanksgiving. And if you have any questions, you can always follow me on Matthew McCall on Twitter. And then go to investorplace.com/moneywire for all of our free articles and everything we got going on there right now. So again, thank you so much. I'm Matt McCall, and this has been your Moneyline.
With Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.